Hello everyone, thank you for joining us. My name is Karina Liu and I'm very pleased to be your host for this 2021 experience. And finally, we are here together 2 years after we last met in Montreal. Today on this virtual set, 4 panelists eager to share their perspective on the current situation in the industry. The central theme of the discussion is the short and long-term impacts, repercussions of the pandemic on the way we live and work, how we build, and finally, how we trade and source wood products. Halftime through the panel discussion, we will present an interview with Mr. Reinhard Binder. He will share with us a European perspective on the North American market and how European wood building technologies may impact the way we build. And of course, we will address some of the questions, I should say the numerous questions we received from you, and thank you for that. So here are the 4 panelists, starting with Andrew Goodman. He is the current President and Chief Executive Officer of the Sherwood Lumber. Andy joined the Sherwood, founded by his father, Bernard, in 1978, and became the Chief Executive Officer in 1990. Before joining Sherwood, he was an accountant working with many public and private companies on their taxes and tax planning. During his tenure at Sherwood, Andy has utilized his financial knowledge and has led the company from 10 associates located on the East Coast to where it is at today, a national wholesale lumber company with associates located coast to coast. Sherwood Lumber is founded on family values and motivated to grow its business alongside its people and partners. Andy, it's a pleasure to have you with us today. Would you like to say a few words to introduce Sherwood Lumber, please?
Absolutely. Thank you, Katrina, and thank you for having me on as a panelist. I'm honored to be part of the distinguished guests. So Sherwood Lumber is as you mentioned, is a family-owned business. It's now 67 years old, into its 3rd generation, and with plans to continue that for many generations to come. Let me just tell you a little about Sherwood that you may or may not know already. And as you mentioned in the bio, our company is really driven on the core values: respect. Respect standing for R, reputation, E, engaged, S, spirited, P, pride, E, execution, C, collaboration, and T, transparency. And equally important to all is our mission, which is we will be there with an impeccable customer, vendor, and associate experience. I truly believe that these statements have provided our passionate team of employees the common thread that cannot be broken and keeps Sherwood Lumber growing and succeeding year over year. Sherwood is a recognized national wholesale distribution company specialized in lumber, panels, and building materials for outdoor living spaces. We're headquartered in Melville, New York on Long Island, with over 90 dedicated employees operating across the country. Today, we operate out of 8+ strategically placed distribution centers across the country, serving over 2,000 different types of customers, from national accounts to mom and pop yards, industrials, and manufacturers in 48 different states. We pride ourselves in a world-class service to suit our customers' needs, from pieces to carloads of lumber and other building materials. Always on time and backed with the most professional staff, from the forklift operators to our senior leaders. Our tagline, "We will be there," has and will stand the test of time, like the past 67 years that we've enjoyed at Sherwood Lumber. Thank you.
Thanks to you. Merci beaucoup. Let me now introduce Craig Johnston. He's the President and Chief Executive Officer of Forest City Trading Group, one of the largest wholesale distributors of building products in North America. Craig has been with the company his entire professional career, beginning as a lumber trader in the organization after his graduation in 1981 from the University of Oregon School of Business. In 2004, he helped lead Forest City Trading Group's employees' buyout as they took the company private. Craig Johnston is currently a director of the board of Mosaic Capital Partners, a private investment firm in Charlotte, North Carolina. A few words, Craig, to introduce Forest City Trading Group?
Thank you. I'd also like to thank the Montreal Wood Convention for today's discussion and putting this together. We were trying to get together last year in person and this year, but look forward to seeing everyone in the future. Forest City has been around since 1964. And as we mentioned, we took the company private and we're 100% employee owned. All of our employees own stock in the company since we went private in 2004. We consist of 11 trading companies scattered across North America and Canada, from the West Coast to the East Coast to the Southern US. Our companies operate in a decentralized model, but we centralize information services, HR, financing, transportation, and anything that will make us more efficient in the marketplace. We have 320 active traders around the United States. We have 60 trainees and interns. We hire and train 30 to 40 trainees and interns in our organization each year. And that accounts for well over 60% of our workforce since 2010. We were in 2004, we were about 95% of our business went into new home construction. We were selling lumber and panels into the building sector. Post recessionary times from 2007 to 2010, we revamped the company. Since then, 60% of our workforce has been hired since that time, and we diversified into a business that today still is rooted in new home construction, but 35% of our business is in industrial, international business, infrastructure, non-residential, and non-building material products. We have about 200,000 transactions annually, consisting of about 6.5 billion board feet in 2020. Our supply base ranges from the Canadian spruce business, which is about a 2 billion foot business for us. That's shifted over the last few years as Western Canada's production has diminished, and we've grown our footprint in Eastern Canada, where today that's about a billion foot business for us. The Western United States is about 1 billion feet. We do about 1.2 billion feet in Southern Yellow Pine lumber. That's a growing business for us as we have a footprint with 4 companies located in the South. Our non-industrial import business is also about 1.2 billion feet as we find products around the globe that bring into the United States, especially the last couple of years with the shortage in building materials. For us, as we grow our company and look for our 5-year plan moving forward, we're really focused on continuing to expand our platform into products that we currently are trading in the building material sector, but also in non-building materials related businesses, infrastructure, industrial, et cetera. And we're also expanding our footprint by using technology to enhance our business. We, especially in the last year, have seen that for us, the ability to improve transparency, efficiencies, and service in the supply chain is a place that we're extremely focused on. So I look forward to today's discussion.
So much for being with us today, Craig. Let me introduce you to Kevin Edgson. He's the President and Chief Executive Officer of Eacom Timber Corporation, the second largest lumber producer in Eastern Canada. He is a certified public accountant with an economics degree from the University of Victoria and a master's in business administration from the University of Alberta. With over 30 years experience, Kevin has worked in British Columbia, Alberta, Saskatchewan, Ontario, and Quebec, holding roles in all facets of the forest products industry. He currently serves on the board of directors of the Forest Products Association of Canada, the Sustainable Forestry Initiative, FP Innovations, the Softwood Lumber Board, and the Binational Softwood Lumber Council. Given it's a pleasure to have you with us, a few words about the Eacom Timber Corporation, please.
Merci, and thank you, Karen. As you said, my name is Kevin Edgson, and I've had the pleasure of leading an incredible team here at Eacom for the past 8 years. Eacom is an Eastern Canadian-based lumber producer, headquartered in Montreal with 7 sawmills and nearly 1 billion board feet of lumber, as well as an I-joist and a remanufacturing facility. We are a young company, but our roots run deep. Our mills have long been a part of the communities contributing to Northern Ontario and Quebec, their economic, social, and environmental development. Next slide, please. Ours is a turnaround and growth story rooted in a goal to be the best-in-class operator, employer, and corporate citizen. To do so, we recognize this is only possible by engaging, empowering, and relying on our employees, as well as our contractors and partners. This approach has been challenged by a pandemic for the past year, but remains the essence of who we aspire to be as a relational company delivering quality products from a certified and sustainable resource. Thank you.
Thank you very much. Merci. I would like now to introduce our next guest, Cees de Jager. He started his forest products industry career in 1995 with Macmillan Bloedel. In 2002, Cees founded Hunter Consulting, delivering award-winning market development and wood promotion programs. In 2008, he was engaged to lead the Binational Softwood Lumber Council. And in December 2018, he was appointed President and Chief Executive Officer of the Softwood Lumber Board. SLB investments have generated more than 6 billion board feet of incremental demand for softwood lumber in the United States, helping shift the market preference from carbon-intensive materials to sustainable wood products. A few words, Cees, on the Softwood Lumber Board, please.
Thank you, Karina, and good afternoon. I appreciate the opportunity to participate in this important event. A little bit about the Softwood Lumber Board. It's familiar to many of you, but for those who aren't familiar, we are an industry-funded research and promotion program, more commonly known as a checkoff. Some of the others that you may know are the beef checkoff and the dairy checkoff that funded the Got Milk campaign. You remember the milk mustaches. Those programs have budgets of over $100 million annually. Our friends of the paper and packaging industry also have a checkoff. It has a budget of about $24 million. The SLB's budget for 2021 will be $16.5 million, and that comes from 264 softwood lumber producers in the U.S., along with importers of lumber into the U.S. The SLB operates under the U.S. Department of Agriculture, but is governed by an industry board of 14 CEOs, including Kevin, who is our first vice chair. Most importantly, the industry sets our direction and investment priorities. So everything we do is focused on return to the industry. We're not a permanent organization. Every 5 to 7 years, industry votes on its continuance, and we require not only a majority of companies voting, but also the volume they represent. We've had 2 successful industry votes to date. The first launched our program back in 2012, and then the second authorized its continuance in late 2018 and 2019. The next vote for the program will take place in 2025. A little bit about what we do. Our mandate is very specific. We're focused on promoting softwood lumber with the goal of increasing and expanding market share beyond the single-family market. To do so, we invest in core programs in the areas of code through the American Wood Council, communications through our Think Wood program, and conversion, which is through our US Woodworks program that leverages many of the learnings that have taken place in Canada with a similarly named program. As part of our 2021 budget, we are expanding our efforts to include initiatives in areas of education and innovation. Ensuring the next generation of architects, engineers, and contractors are familiar and passionate about building with wood means we have to invest less effort and dollars to converting buildings currently designed in steel and concrete. Supporting innovative approaches on how buildings are built and what products are used gives us an opportunity to capture more market share, particularly in the non-residential sector. Of course, we measure everything we do to ensure we deliver value back to the industry for their investment in our program. And since inception, the SLB has generated 73 board feet or $30.62 for every dollar invested by the industry. Thank you again for the opportunity to participate.
Thank you for being with us, Cees. And you accepted another role today to moderate the discussion. So I'm now handing over to you.
Very good. Thank you again. And thanks for all of you who are joining us online. As Karina mentioned earlier, we'll be discussing 3 topics: the way we build, the way we trade and source, but we're going to start out with a discussion on the way we live and work. In response to the pandemic, companies and their employees have adapted very quickly to working remotely. No travel, meetings with customers, or networking with colleagues. Teams, Zoom, and other video platforms have become the new way of meeting face-to-face. After a year of operating in this new reality, and without the need to commute, some people have even decided to look for new homes, further away from their workplace, with more space for an office, or maybe 2, a gym, and a backyard. Of course, not everyone can work from home or will want to continue to do so, but many prefer it. So for the panel, will these changes be permanent? Will we go back to work as it was prior to March 2020, or something entirely different? Craig, what are your thoughts on this?
Well, for us, because we were able to put 100% of our workforce working from home about a year ago this time. And we had actually tested that in February and made sure everybody had workstations and monitors and everything they needed. We're not in the manufacturing segment. We outsource our manufacturing to third parties, and our distribution is also the same way. So we're outsourcing to third parties. So we were able to mobilize pretty quickly. And as we see the developments that are going forward for us, as we start to migrate back into the office at our 13 locations, we're seeing a hybrid. So we're being flexible with this. We're being flexible with time allotments, people's ability to get the job done. And I think technology's played a big role in that for us. Our systems were able to handle that pretty efficiently. So I think long term, I think flexibility is going to be the key, and just making sure that we're doing everything that gets the most productivity for us. We also train a lot, so in-person training and Zoom training has been a bit of a back and forth, but we've had a pretty good success with it as everybody's mobilized around that.
Andy?
Yes. Our return to work has been staying at home since about a year now, with the exception of those essential workers who are the yard workers and the drivers, who did. We took all precautions for safety, and we were lucky enough to not have any issues with any COVID within the yards that we're operating. The future, as we adapted and we were more excited over the idea that we were able to improve many ways of our internal communication through these new platforms, established in certain ways more productivity around the workplace. So at this point, we haven't really made any determination how we're going to go back to work, but permanently we're going to see for sure a shift with more people at home, with more flexible scheduling and less required face-to-face work. And managers and the organizations will have to embrace the idea that it's not a requirement to have to sit and see your fellow workers perform their tasks, as long as we all are productive in getting the results that we're looking for.
Interesting. Are you finding that some of those managers are having a challenge with that part of it, the ability to measure an employee's performance while they're working remotely?
I think at the end of the day, there won't be really a way to measure the coming and going and the activities that are performed on a remote basis. And you'll have to give that up for the sake of the measurement of just what are the results that your KPIs or your objectives are. And that means the freedoms that are granted while you are working at home will be a benefit. And as many say, they are working equally or more at home due to the fact that it's just a few steps away. It's more convenient at different times of the day. So it's just not the routine of showing up at 9 to 5 or whatever. So I don't think, I think you're going to just have to give up that whole idea of how you really measure that performance versus, you know, having watched somebody sit at a desk versus not watching them at all.
Sure, no, that's a good point. Kevin, you're obviously in the manufacturing side of the business, and which has a whole host of other requirements around it in terms of being on site. How are you finding the current period and your forecast on the transition of your teams?
Thanks, Case. I think there's two elements to our business. Obviously, on the manufacturing side and the forestry side, the folks have to be on site and work, and that's driven to a lot of protocols and efforts in terms of the health and safety of the workforce and our contractors and our partners. In terms of the support services, I think we were quite flexible before, and I'd echo what Craig and Andy have said, that it's more likely either a continuation or an extension of both a hybrid flexible program. The one place that I guess there's two elements. One is we hear very clearly from our workforce a desire to reconnect. And we need to balance that with the health and safety of the people that work at the company. But the second is that we find that the work with young people, developing their careers and training and onboarding new employees is very difficult to do on these platforms. And I think we look forward to getting back to being a more in-person relational company, at least on those elements. But the technology has clearly enabled an ability to do a lot of things remotely that we might have thought in the past wasn't possible.
Yeah, very good. And relationships are so key. So particularly for Craig and Andy, your connection with customers is more direct. Do you expect to be back on the road, or have your teams back on the road as soon as they can interact with customers, or will it be again similar to your office teams as a hybrid approach in terms of the interactions and engagement with them?
Well, I can take.
Go ahead, Craig.
Yeah, well, for us, I think we'll have a hybrid approach. I think we'll still be using some Zoom. We're so entrenched in our business as a relationship business, as I think everyone is. And so those relationships take years to develop. And so I think we'll be our industry face-to-face meetings, seeing sawmills and production, seeing the customers, understanding their needs. I don't think that'll go away. In fact, I think we'll gradually get back to normal, and within a few years, I think we'll be full bore traveling and seeing each other again.
Very good. Andy, did you have any thoughts?
Yeah, much the same with what Craig just said in terms of the relationships, the importance of it all. We have road salespeople who go out presently. They did return to work after a period of time to go see face-to-face in certain places. I believe that the show and tell part of their time spent on the road demonstrating products through the technology and through the change that we could deliver to more people, more information, more efficiently through the technology. That would be a way for the future to provide customer education. However, as Greg said, there's there's no replacement for face-to-face visits with the customers. The picture tells a thousand words. So and much of the business as we know it, which is the backbone of our business, the relationship, over time it's been the successful method for us. So there's no reason not to return to it.
Yeah, I think that's right. That face-to-face interaction, that networking is so important, and I guess that speaks to trade shows and conventions as well. The NHB recently just canceled their builder show, but I expect they'll be back next year. NALA had a virtual event that was somewhat successful. But is your expectation that trade shows, conventions, those type of show and tell events, as you call them, will be back as normal once the viruses are in everybody's arms?
I wouldn't know where the trend had been leading over the recent past, but my sense of it is, while everybody has had a shift in work balance, life balance in their workplace, the effort, time, cost associated to trade shows and the frequency of them around were maybe an overkill. And certainly from the exhibitors' point of view, who were running around week after week and spending time in the airports, and everything takes a bit more time to get to the place and set up, and the before and after. It really, I heard often that it wasn't as productive as they'd like it. So maybe there'll be less of them with hopefully more of an impact, and a continuation of these kind of virtual conventions and or trade shows as we will.
Interesting. Thank you for that. Kevin, did you have thoughts on industry trade shows, conventions, those type of events?
I think the two other gentlemen speak to a point, which is the relational nature of the business that we have will always warrant, or at least draw a desire for face-to-face interaction, the networking, the building of that relationship. Ours is an incredible business. The amount of transactions that are agreed on the, effectually a handshake with paper to follow is unprecedented in the marketplace. And you can't do that simply developing relationships on platforms or telephones. Having said that, I think the flip is the educational component or the training component of trade shows. I think we've seen through electronic platforms and the like that those have been very effective. And so what we may see is more of that element of the trade show showing up electronically, but the networking element of it, the building of the relationships, I think that side will continue. And there's a desire amongst the participants to be that way.
Yeah, thank you for that. Craig, anything to add on that topic?
No, not really. I think we covered it. Trade shows are, sometimes they get busy, but for the most part, it's not just the trade shows. It's getting out to seeing somebody on their own turf that we prefer a lot.
Yeah, that makes sense. Good, thank you. So let's move on to our next topic, which is the way we build. The pandemic has led to changes in preference in terms of housing mix. A trend towards multifamily has shifted back to single family, and certainly the demand for non-residential construction has diminished, particularly for the hospitality sector. Demand for single family suburban and rural housing has grown while condos have diminished. Of course, the repair and remodel market has been extremely strong since people are spending more time in their own backyard. And then, as we mentioned, we've seen declines elsewhere. Curious, Andy, as you're looking forward in your business, are these just temporary responses to the pandemic, or are you seeing these as a start of a trend? So more single family, less multifamily, stronger repair and remodel, and a shift away from condos and downtown office structures?
Well, there's certainly been a flight out of the big cities, the costly cities to live in, while there wasn't work, while there wasn't the leisure activities that the cities offered, and while the affordability over time, the trend has been who will remain in the cities at the cost of living. So there had been, whether it been the smaller cities, the sub-cities of the major cities or the suburbs, there had been a trend of people leaving that city. I think really what's going to determine how the cities come back or not, and they all have come back after disasters of one sort or another like this. So it will take its time, and this one may take longer, particularly if the large corporations have found that the remote workplace is an effective, efficient means for both the employee and the employer. And if they don't occupy the downtown space and the number of people no longer required to commute to an office, I think the cities will have its challenges. And there's an enormous pent-up demand overall for homes since the crash in 2009. And the number of homes that were built, and especially with the millennials coming on board and being buyers, the market has a tremendous demand with a short supply. So I see nothing but a continuation, as they talked about it before the bust in 2009, that we have a population explosion for the number of homes that were and have been currently being built, and we're now reaching new records or getting back to really healthy numbers.
Interesting. Craig, what are you seeing on the West Coast in particular?
Well, it's interesting. Having a millennial son in the Bay Area working for a high-tech Fortune 500 company who was told a year ago he could work anywhere, and also told at the start of this year that they weren't going to come back to the office. His campus has 35,000 people, and they weren't going to come back to the office this year. So his ability to move anywhere and work anywhere is kind of, I think, a microcosm of young people that are moving into housing. He chose to stay in the Bay Area. He says now the Bay Area is starting in places to become affordable where it wasn't becoming affordable to buy a home a year ago. So I think we'll see a mix. I think we'll see people move back into the cities. I have a son in New York, would live nowhere else. So that's part of our cities are very vibrant. And so I think we'll see people move back and as time goes on. I also think the multifamily sector will come back. Right now the apartment size multifamily for a variety of reasons has slowed some, but we're underhoused in the country. We're definitely going to need affordable housing. So I think that sector will come back. It's a pretty big sector for us, and we're already starting to see an increase in jobs being bid for the third and fourth quarter.
Interesting. Kevin, perhaps a perspective from north of the border. Do you see similar trends to what Andy and Craig are seeing?
I think so. I think you have to start off by recognizing that the urbanization trend for the last 100 years has been pretty steady, and those drivers haven't changed. I would almost see that what's happening now is really just a bit of a slowdown, and maybe a leveling out of the rural urban sort of split. But I agree. I think as the next generation comes on and the one after that, we'll probably see a drawback into the city for all the reasons people love to live in cities. And I think the flexibility of being able to work from where you want, we're going to see families finding smaller communities making more sense for them. So I don't think we're seeing a major paradigm shift, but moreover just a balancing.
Interesting. Very good. Well, that brings us to another topic that drove our business over the last 12 months around the lumber demand for repair and remodel, particularly outdoor living and people enhancing their living spaces. Where do you see that segment going in 2021 with vaccines rolling out and getting people getting out there beyond their own backyards again. Kevin, do you want to touch on that one?
Well, I think it was a godsend last year in terms of the R&R market really spurring on demand for building products in general. And I think we have to accept that at some point those job jars start to get, if not empty, at least they've pared down some. The offset on that is clearly what we're seeing now, which is an increase in actual home builds. I think R&R has always been a really steady part of our business. And I think, quite frankly, the past year has shown a lot of people what they're capable of doing, either directly themselves or through contractors. So it's a robust part of the market. It'll probably not be as robust relative to new home build in the coming years, but I don't see it waning in any way.
Interesting. Craig, what are you seeing from your customers in this space?
Yeah, I would agree with Kevin. I think we may be coming into summer slowing down a little bit in it as people kind of get back out and go to Disneyland rather than build a fence. But for the most part, it's pretty steady. Our flow to our customers, and some direct and some that service that business is still quite robust. And there's still a product shortage, especially some of those items, decking and fencing, some of the products that are going into that sector. So I think it'll take a bit to slow down as people still have projects that they put on and started to think about 6 months ago that are just kind of getting started. So, but I think it'll level out as the year goes on.
Yeah. Andy, are you seeing anything different on this?
Much of the same. The trend had already began before the pandemic in terms of having the repair and remodeling trend going higher each year. Number of outlets of certainly the big boxes have been growing, and the attraction to the marketplace for the regular homeowner to do some of the projects at home been stimulated from their educational platform. So it will be a continued rise over time. This shot in the arm of staying at home, having money, disposable income, having to school kids at home, have to work at home, having to have leisure at home, all required a little bit more space or a little nicer space. So that was a necessary part of the upgrade. But over time, maybe we won't call it a boom, but as houses age and repairs are needed, that marketplace will always be around. And certainly as our country grows in number of homes and homeowners, it will be a continued, maybe not boom, but a good business.
Very good. And I don't think this is necessarily tied to the pandemic. Certainly we were facing labor shortages before this onset, and with unemployment coming back to its pre-pandemic levels, labor shortages are going to be a challenge throughout the supply chain. When it comes to production, do you sense that this prolonged labor shortage will start really driving the shift to offsite construction? Perhaps, Andy, you can start commenting on that from what you see in the East.
So, the labor shortage, certainly after the fallout of the Great Recession, where many workers just stopped working and never came back to work, and the shortage or lack of interest of young potential candidates to join that marketplace wasn't particularly supported so well. So at the end of the day, we're short in skilled labor for sure. And there had been a trend of offsite prefab, as well as all of the wall panel and other prefab manufacturing had been growing, and for some good reason. One, whether you had a good labor force and a skilled labor force, whether you could schedule them better than out in the field, whether you had better safety and cost controls. And at the end of the day, there's been, an emphasis on all aspects of what we do in quality, and the control and the quality of the work that came out of the offsite construction could prove to be better than the onsite. So I think it's going to be here to stay, and it's as it has been trending higher, it's just going to continue to go higher.
Very good. Craig, what are you seeing?
Yeah, we're seeing, a continued growth with our customer base on some offsite construction, but it's still at whether it's the truss yard or the wall component plant, or some of our current customers that are just adding capacity on the site at their lumber yards. It's a growing segment, and part of it is just the efficiency standpoint. Part of it's the demand at the job sites. And labor is all throughout the workforce, right? So like Andy said, it's electricians, it's plumbers, it's the whole workflow as we continue to grow housing. So I don't think it's a radical change that we're going to have someone come in and say we're going to build the whole house offsite to change the way we do business. That doesn't seem to be completely efficient at this point. Maybe in the future, but at this point, I think it's just going to be a continued growth throughout the supply channel to do offsite construction in segments rather than the offsite construction in the factory.
Interesting. Kevin, does that pressure from the offsite manufacturers, particularly around automation and their quality requirements, put pressure on you as a manufacturer to make changes in terms of the mix you sell or the product standards you produce to?
No, I don't think so. I think the standards of a craftsman building a stick-built house by themselves were reasonably high. I think with the technology that we have in sawmills today in terms of precision end trim and the like will allow us to meet any sort of demands that are required. And I agree with both Andy and Craig that I think this is an evolution that will continue to move forward, and people will continue to be drawn to the flexibility that softwood lumber provides in terms of a construction material. Mass timber's an excellent example of that.
Well, that's a great segue to the next topic. RBC recently published a report on mass timber showing significant demand. We at the Softwood Lumber Board recently completed a project as well in terms of demand estimation, or track very similar numbers to RBC. Just on the screen here where we see those opportunities, particularly in the non-residential sector as growth opportunities. The question is really around the impact of higher pricing on mass timber's growth. Kevin, just sticking with you, do you think the overall demand for mass timber products and those kind of systems will be affected by the high commodity price environment we're currently operating in?
Well, picking up on the previous comments, mass timber is a long-term evolution of building systems. So as with all evolutions, there's going to be challenges, and currently high commodity input costs are an example. But I think the underlying drivers remain, and we really believe in this trend. I think this is the future of, at least in terms of multifamily, the way we're going to see the use of softwood lumber.
Terrific. Craig, you deal with mass timber, or at least CLT, for rig mats. Do you see growth there, or growth in the architectural side as well?
Well, I would echo Kevin in that I think it's an evolution that is going to happen. I also want to kind of thank your work at the SLB for all that you guys are doing to promote mass timber in construction. And that education is imperative, and I think we'll continue to see that that not just in the multifamily sector, but in suburban real estate and office buildings, et cetera. So that I think it's going to be a continuing story. The CLT that goes into the matting side of the business is definitely impacted by higher input costs, but it's also impacted by the current administration and what we think is going to go on over the next couple of years with the pipeline business. So that business is slowing down anyway on the demand side.
Very good. Andy, are you seeing much mass timber out your way?
I haven't seen much. I hear that there's challenges for those producers to procure product going into the open market for their KD material, as well as not having some of the timber base that they could work with, like for the veneers, like some of the manufacturers. So, but I haven't really had much interaction with any of it.
Okay, well, thank you very much. Thank you, gentlemen, for your comments. We're going to kick it back to you, Karina, for the interview with Herr Binder.
All right, thank you, Cees, and thank you, everyone. So great discussions, and we'll move on to a third topic in a couple of minutes. But for now, we want to explore a European perspective on the North American market. So Mr. Reinhard Binder of Binder Holz will share his views on the role of the European wood in the U.S. market and on the European experience in terms of mass timber construction. The interview was conducted a few days ago by Sven Gustafsson, the Montreal Wood Convention event director. Let's watch this.
Okay, so let's go. So my name is Sven Gustafsson, and I'm the event director of the Montreal Wood Convention. I'm here today with Mr. Reinhard Binder, the owner and CEO of Binder Holz. Thank you very much, Mr. Binder, for taking some time to be a part of the Montreal Wood Convention.
Thank you for inviting me, and it's a pleasure for me.
Yeah. So first of all, I would like you to tell us a little bit about your company. And I know that there have been a lot of changes in your company the last few years. So could you please explain a little bit about your company, what you're doing, and where you're located?
Our company was created in 1950. My father. I'm the second generation working, and the third generation, my nephews, are just working with us. And so we started very slow in the 60s with a small sawmill, and every time we just thought about to make finished products. You know, in the first years, it had been only a planing mill. And then in the late 80s, with the multiply panels, then glue-lam beams, and then CLT. And we always has been one of the pioneers in Europe for creating new products, and also pellets, also energy. That means that everything by producing sawn timber, also the bark, is reworked to finished products. And this we step by step we started then outside Austria also with a sawmill in Germany. And then in 2015, with the 2 sawmills in Finland. And then in 2018, with the 3 sawmills of Klenk. And at least now with the 2 ex-Klauser sawmills in Live Oak and Enfield.
Well, as we all know, North America is going through a boom in construction right now. And in 2020, the imported volume grew from 3.5 in 2019 to 5 million cubic meter in 2020. And I saw that FEA, one of the main forecasters, recently estimated consumption in North America would grow by 10 million in 2021 and an additional 3 million in 2022. The question is, of course, whether Europe has the capacity to supply even more to the United States and at the same time supply other markets in Europe and elsewhere. What is your feeling?
My feeling is that we are not able to deliver much more volume like we're doing in these days, because the European market is such as empty I've never seen before the last 40 years. Is on the other side, the US market is booming, but on the other side of the world, in the far east market, like China, you know how the consumption of food products are rising up, and especially if you see in this time, Chinese went to Europe, went to eastern part of Europe to buy logs, but also for other materials, like for the packaging industry, we are completely without lumber. It's incredible how they are asking for every quality of lumber.
Finally, I would like to move on, and you already mentioned the new construction methods with wood, CLT, and glulam. And I understand that those are really successful now in Europe. Do you have a feeling of how much market share that type of wood construction has taken from concrete or steel in Europe?
We had been in a very low percentage part of the concrete or steel production in the past. But if I see now, also from governments, to push the wooden construction from Italy on to Switzerland to Austria, Germany now. I've seen yesterday the new rules now to push the CLT or wooden construction as well in Sweden, in France too. So if you get from this low percentage to 10%, it's such a high quantity that that I'm not sure how we are able then to fulfill this demand. For sure, we have enough lumber again from the sideboards, you know, from the packaging lumber and so on. We have again a lot of optimizations, but at the end, you see just now the demand from, I think it has been doubled the last 5 years only in Germany, or doubled in France as well.
Yeah.
And if I see in the northern part of Europe, in Sweden, how they are pushing the use of wooden construct, it's really incredible dynamic in these products.
I guess we're talking of now millions of cubic meter going into that sector.
I think it's possible. Yeah. I think this may be the reality.
Well, thank you very much, Mr. Binder, for this interview. Of course, next year we hope to see you in person in Montreal, but thank you very much for taking time with us today.
Thank you also, and have a nice day.
Thank you.
Thank you for this interview, and thank you to Sven for interviewing our special guest from Europe. Quite interesting to hear his perspective. The entire interview, by the way, is available on the Montreal Wood Convention website. And now let's get back to our discussion with the panelists. Case, we'll discuss now the way we trade and source.
Thanks very much, Karina. Obviously, the increase in demand induced by the pandemic, pent-up demand overall, and lower interest rates in the U.S. has created pressure on the full supply chain. And the question really is, I think the first one, in terms of where is the wood going to come from? We heard Herr Binder's comments that Europe is unable to increase significantly. What are your reaction to his comments, and what other sources of supply do you see? Craig, you're a significant importer and have your finger on the pulse of the global markets. Are there opportunities for other sources to meet the growing opportunities in the U.S.?
I think I would agree with Mr. Binder in terms of European supply and global markets. There was a beetle kill log issue in Germany, and a lot of those logs did end up in China, but they're not today. They're keeping those logs internally for production because of the global market demand. Places like the Middle East, where pricing was significantly lower than North America, have now caught up. So pricing has caught up to the U.S. marketplace in terms of demand. There is new construction going on in Europe, mostly some places, in Eastern Europe, Czech Republic, Belarus, some of those areas are increasing demand. Also, the Russian log export ban is going to have some issues on log supply for China, as they have that growing appetite. But we'll probably see more supply out of Russia from a lumber standpoint globally. What's that mean for North America? Well, we just saw a new mill in the south open up, I think about 300 million feet this week. There's other new mills under construction. So long term, the fiber here is gonna have to come from the southern U.S., and that seems to be where we're adding production rapidly. For us, that supply imbalance is really an education piece for our customers as we try to not just bring product from Eastern Canada into traditionally Western markets like Phoenix, but we've taken product from the south and shipped it as far north as Alberta, from the southern U.S. So we're educating our customers as to where we can get supply, how they can keep their plants running in these times. And I think there's always enough lumber to go around. It's just how do we get it from the supply source to our customers so they can operate.
Thank you. Andy, are you seeing any sources outside of the U.S. South that could potentially come and meet the demand?
We've been importing product over the years, some of the years heavier than other years, as a alternative and additional supply channel. There hasn't been, other than the desire from the government right now to see whether the sawmills can produce more lumber out of their existing mills, and I'm sure the mills are trying to produce as much as possible in a given shift or 2 shifts, or as much logs as they can procure to keep full tilt operation. But at the moment, as Greg said, European market and Chinese markets and the world markets, their demands are rising, and the balance of supply will continue to stay closer to home if there is that demand. So I think we'll be challenged we'll be challenged with high prices for sure, and certainly certain supply channels that are just drying up, whether they be products that are going on contract or on exclusive arrangements. So nothing that I can really see that's going to do any short-term relief.
Interesting. Thank you, Andy. Kevin, so it's good time to be a lumber producer, except you got to find the trees. Any signs from where you sit on where those trees are going to come from?
No, in terms of the Canadian context, all of the sawlog quality fiber is pretty much allocated. I think at best we'll see modest incremental improvement over time, just as we improve the process and recovery of lumber out of logs. But there isn't a large basket of sawlog quality, and I'm very definitive in that. In as much as there are areas that there is additional cut, but we're looking at low-grade quality lumber or logs, that might be more attuned to biomass or pulp applications or hardwood. So we're really pretty much tapped out from Canada. It's clear that the U.S. market is desiring more lumber than is available domestically. We've seen a repositioning of lumber sales from overseas into the U.S. market, and that's still not enough. So I'm not really sure where the additional fiber is going to come, but we do need to be cognizant of the fact that the supply that we have, we need to ensure it continues to flow, and make sure that what we don't do is find ourselves dealing with substitution.
Yeah, no, that's a really good point. And obviously that tight supply leads to strong pricing, and no other global wood products market has seen the extreme price volatility that we've seen here in North America. We've heard some folks voicing interest in having a different structure around contracts, monthly, quarterly, even annual contracts, to try to provide some more predictability. From a more North American perspective, do you see any realistic approach in changing how we sell or go to market in North America? Craig, I mean, you guys are traders, so do long-term contracts make sense?
Well, I think it's probably a better question for the producer, because kind of depends on how they price their log supply, their input, and that in a lot of ways, in a lot of areas, is a spot price more than a long-term price. We're the only country that kind of does this on a transactional day-to-day basis in the world. So it creates this volatility that we're seeing this past year or two. As supply demand gets out of balance, you're going to have some volatility. And then as you slow down price discovery, you generally have more volatility in most commodities. So because you get these gaps in price discovery. This particular year, the average price increase or decrease, the average price change in random lengths composite was $28 per thousand per week. The highest we've ever had in history was $8 a thousand in 2018 in that one spike. It averages about $5. So we've had tremendous volatility this year. As supply and demand gets back together, I think that'll decrease. But you still need daily price discovery to kind of keep that volatility from having these gaps in pricing like we experienced.
Thanks, Craig. Kevin, he's pointing the finger at you. Any insights in this?
I think the concept we have to understand is really about price cycle alignment. And I think Craig makes a good point. It starts with logs, goes through the manufacturing process, it goes to the intermediary, and then ultimately to the home builder or the consumer. It's part of the same conversation that we had previously in terms of the impact of pricing or commodity cost inputs on mass timber. There are technologies available. This is not an ability to find ways to balance out that. The Chicago Mercantile Exchange and the hedging program that would be available for buyers or sellers is an option. There is at least one electric platform that I know. What we've got is a lot of process inertia, and it requires a certain level of business acumen and maturity to understand the requirements to find that sort of alignment over time, that we get a better sync. So I think it's very possible, but it doesn't come easily to a business that's been built over a century in terms of that price discovery almost on a daily, but most certainly on a weekly basis. And it's going to have to require a leaning into some of the technologies that are available to at least find some stability. But that's no more a producer's issue than it is a consumer's issue. Consumers have every availability that a producer does in terms of finding tools for price stability.
Andy, what are your thoughts on this, on pricing overall, and more specifically longer term contracts?
So there's a lot of angst when the prices, as Greg just talked about, the $28 being the average over 8. And that's not every year. And I don't think we sit here and believe that for the next decade, every year is going to be as volatile as we've just experienced in the past 12 months or 18 months. But there'll be volatility. and we've been dealing with that as part of the U.S. market from day one, but not to the extent of the volatility that we've just been experiencing. So my take is that right now it's a focus on everybody's plate as a result of if they own too much or they own too little, and they have orders that they have to fulfill, and they're on the wrong side of the equation. But over time, it seems to me that we should have some more steady pricing rather than this volatility on an average year over year, due to the contractual arrangements for a greater percentage of the production, at least from the north side of the states, on a contractual basis based on a formula. And so their wood isn't in the open market. It has to go to price discovery to find what it will take in an oversupplied or undersupplied market. So over time, I believe we should probably be, we don't need any new agreements. We just need to go back to a little bit normal demand supply.
Very good. Thank you. Craig, when you and I were chatting yesterday, we talked a little bit about our experience in the early 2000s with electronic trading platforms, specifically Forest Express. More recently, we've seen startups like Materials Exchange and Yesler coming on stream. And has their time finally come, or are we going to stick to the normal way of trading?
Well, I think we'll evolve into the use of technology. I think we already have some of that is with by necessity over the last year. I think we'll evolve where technology will have a bigger role in our industry in terms of the business platforms that come out and put that together. I think that's up for debate. But what we believe is that the industry is still, and you're seeing this today, the industry is built on relationships throughout the supply chain. And I think technology can help those enhance the efficiencies of that supply chain. And it can help us be more efficient on a one-to-one basis for B2B. I don't think we'll get to many on an auction market with the products are too diverse, the supply chains and relationships are too tight. So we look at technology to be kind of a really to enhance the transportation, the efficiencies, take cost out of the supply channel, and work on that one-to-one relationship with supplier and customer, just to make the whole process more efficient. And enhance the business that we're doing today.
Makes sense. Andy, are you incorporating electronic trading platforms into your business?
Like Craig said, it's, if whatever can come along, and it's coming along, although, the idea of the trading platform, which has been tried and tested over the period of time, just hasn't found its place just yet. The idea of having a simpler, more user-friendly, more resourceful, more efficient method to exchange information, to the relationships that we have with one another, and make it more transparent and convenient. Those will develop, and those will stay, and those are the things that we were forced to start to use in this era, and they'll be around. The other idea of just the open market, bid and ask, and finding sources, there's consolidation at the vendor and customer side is one place that if there were a growing number of vendors and a growing number of customers that you needed to reach out to, that you needed to source, there would be more of this would provide more of a solution of a trading exchange. But it's getting narrower. The field is getting narrower, so it has to find a place. It will find some place. I'm not exactly sure how it will impact everything.
Thank you. Kevin, are you seeing a place for these in your business?
No, I agree with Craig and Andy. We've had a customer portal for some time. It facilitates the relationships we have with existing customers. Ours is not a business where if you're trying to source wood or if you're trying to sell wood, that there is an inability to connect with customers. It is about building those relationships. And so I think technology is going to, as Craig had said at the beginning, is going to facilitate that. And Andy gave some good examples. I think the more effective use of technology is going to be about addressing the volatility. And again, helping those that have existing relationships or like mind in terms of what they're looking for, perhaps find ways to bring some price stability. But I don't see it as supplanting the personal relationships. And quite frankly, I think we'd lose something if we did. A lot of this business is not tied on the price. It's tied on the service that you provide from manufacturing all the way through to the end user. And that's a people element. Service delivery, ensuring people get what they need, when they need it, where they need it, at the time they need it, is really not something you're going to do electronically.
Excellent. Andy, Craig, and Kevin, thank you very much for your insights. I'm sure our audience appreciated the discussion. A couple of takeaways from my perspective before we go to audience questions. Seems to me fiber supply, high prices, and the tight labor market will remain a challenge, but one that can be addressed through innovation, creativity, and delivering really the right value proposition to our customers and prospective employees. The demand and opportunities for wood will continue to grow. The entire supply chain will need to adapt and be responsive to those changing needs in the marketplace to ensure it maximizes the benefits. And as you as panelists have noted, the way we work and live and trade in 2021 and beyond will be impacted by what we've experienced and probably enhanced by what we've learned over the past 12 months. To me, the future is bright. I think there's no other industry I'd rather be in. And all signs point that the 21st century will be the century of wood. Karina, with that, back to you.
I love it. The future is bright. I love it. Thank you so much, Case. And to all panelists, it's such a pleasure to listen to you and hear your perspective. And you all accepted to enter the game of answering many of the questions we received from participants. And we got many, actually. So we'll break the ice with the first one. And I'll turn it on to you, Andrew. What do you think a fully vaccinated post-COVID world will look like for home renovation demand? And for each question, I'll mention who brought the question to you. This one comes from Rob Ruby from Western Forest, the main sponsor of this event, by the way. So your take on this.
Thank you. Rob, thanks for sponsoring and thanks for the giving me the tough first question. We did talk a little bit about the home remodeling, repair business, the boom that we've experienced. So the idea that this will continue year over year in a renovation to the demand that we've just experienced, I don't believe that will continue. There will be a spillover for sure. There are projects still underway, projects on the drawing board, and there's an interest, and there's a cost savings as well for many people. So they will replace some of their now home activity business, whether it be home office or whether it be education or whether it be leisure, that will remain at home rather than going to the places that they were there before. So over time, it will kind of look like where we were before all of this, but probably a little bit more focus on the fact that there'll be more time spent at home due to the fact that I think we all believe that the remote workplace is a business that we're going to be in for the rest of our lives.
Interesting. Thank you for your comment on this question. The next question will be for you, Craig, and it's coming from Bob Giroux from Sunbird. The question is, what are you predicting will happen to demand and pricing once North America has a handle on the COVID issue?
Wow. I don't know if I can predict pricing. That's a good one. Well, I think we've got a very robust economy, and in North America, and housing demand just isn't strong in the United States. It's strong in Canada, and so it's really going to depend on supply. The getting everyone vaccinated and getting people back in the workforce will help on the supply side. Where we can probably get some shifts up at some sawmills that have been curtailed in the South. We can get employment back to the production side of the equation, and over time, supply and demand has its way of work its way out in our industry, and that will have the biggest effect on pricing. I was smiling earlier. I was at a convention, I've been around a while. I was at a convention in 1993 in Chicago, and the title of the convention, this is when we had the spotted owl crisis, the title of the convention is, "Where is the lumber going to come from?" And it was really a discussion from the national home builders that they couldn't get lumber, but they could get lumber, they just didn't like the price, right? And supply and demand have a way of coming back together, and I think that'll happen at some point.
Thank you. The next question comes from Christy Lennox from Interfor, and I'll turn to Kevin for the next one. So what are the forest and wood products sector planning to do to increase the participation of people from diverse backgrounds in these industries?
I think that's a really prudent question today. The fact is, the industry today struggles with recruiting in its entirety. And therefore, the source of that solution is going to lie in parts of the population that are not currently well represented in our industry, and that's both the gender and visible minorities. To engage those populations, we first have to recognize what is it about our industry that is not attractive. We have to make sure that there is a discovery of the opportunities, both in terms of the technology and the communities that we function in and the like. And it's really an engagement and education process, both for us as an industry to understand what it is that we need to do to encourage these people to be interested in working in our industry, and for us to educate people on what those opportunities are. We have a lot of folks that are getting nearer to their retirement date and their start date, and it's really a pressing concern of ours in terms of encouraging the broadest number of people to be interested, so we can find the very best and brightest to join us.
Interesting. Thank you. Cees, the next one is for you, and it's coming from Julie Gravel from Riam Lumber. The question is, will high lumber prices lead to lost market share to steel and concrete construction?
Thank you for the question, Julie. Another crystal ball question, I think. I think there's always risk of substitution and market share loss in markets where we dominate, like single family. But I think also we have to realize it's not just about price. Converting your normal process from wood to steel or concrete is much more complex. It requires changes in trades, design, and scheduling. And certainly other prices are experiencing price increases, although not as significant as lumber. Our sense is that those will continue to see price increases for steel and concrete, especially as the economy opens back up, and there's lots of talk about infrastructure bills in the US, which will lead to increased demand for those materials. So as I see it, we need to sell on the value of the products we produce, not just on price. And if we do that, we can not only maintain the market share, but grow it.
Thank you, Cees. The next question comes from Joel Winters from Middle Atlantic Wholesale Lumber and Building Materials. Craig, I'll turn to you for this one. Is the physical investment by Canadian and European producers in the US driven by access to fiber or access to the market itself?
Oh, it's definitely at this point been access to fiber. the Canadians, the Western Canadian integrated sawmills have access to markets in North America for 50, 60 years. But the fiber basket in BC has diminished dramatically. And at least in the short term, there's not new fiber coming. And so their expansion into the US South has been getting access to that fiber and a very low cost fiber at that. So Southern Yellow Pine logs increasing in price has not happened yet. And until we get production, it probably won't for a while. So it's definitely been a fiber play.
Thank you. And Joel Winters had another question, and this one I will ask you, Andrew, your opinion on it. It's a long one. Eurofiber has come and gone in previous cycles, and given the relative nature of global markets, what is the most important factor that will move the current Eurofiber wave away from the US market?
Good question. It's come ashore in the times that our price was competitive and in certain cases at a higher price than the other markets that the Euro wood was serving. At the end of the day, the America-US economy is the largest, biggest consuming one. So there's always going to be a place for them to bring wood ashore. Whether they're happy with the return will be a different story. And over time, everybody's happy with the return, I assume, at the mill side with record pricing that we've had. It will always stay at record pricing. So as the European market continues to rebound and grow, and the US market continues to grow, it'll just be the bidding war to bring product into the US at an equal or better price than what they can do in their local marketplace. But in many cases, the larger manufacturers want to have a market in various places around the world. So they'll stay in markets, whether they're getting exactly the return that they would like. They'll ride it out for the long term.
All right. Thank you, Andrew. Kevin, this next question comes from Raymond Wang from Western Export Corporation. Can Canada increase its annual allowable cut? And can Eastern Canada compensate for some of the lost production in the West?
I think that's a fairly easy question to answer. And Eastern Canada cannot compensate for the reductions that Western Canada has experienced given their pine beetle epidemic. Eastern Canada has pretty much tapped out the sawlog quality. There will be incremental improvements that are based on improvements in technology. But there is not additional supply, untapped supply that's going to materially change the supply out of Eastern Canada.
All right, thank you. Cees, the next question is for you, and it comes from Olivier Corbeil from Arbeck. How will mass timber construction develop in the high lumber price environment?
Good question. I think we discussed this, or the panelists discussed this a bit earlier. And I agree with them. Mass timber is part of a much longer term trend that will continue to take hold in the US as it is in Canada and elsewhere. And price is a factor, but it really is about other benefits that mass timber provides in terms of the design of the building, efficiencies, so cost savings in construction, and incremental value that the developer is able to achieve for his or her project. Not to say they're not barriers, but they're not price. It's more around insurance. One of the challenges that we're working on now with insurers in the US is insurance rates related to fire risk. Certainly contractor knowledge, the ability of contractors to install and maximize the efficiencies brought about by mass timber, and then reliability of supply, which is improving and I think will certainly improve over the coming years.
All right, Case, another one for you. This one from Kevin Miriam from the Maritime Lumber Bureau. How will the Softwood Lumber Board modify its promotional programs to adjust to a new situation?
It's a good question, and I think we're no different than the panelists in terms of learning from the past 12 months to do things differently and more efficiently. Certainly our training programs and education programs can be delivered much more efficiently online, and we've discovered they can be just as effective as the face-to-face. So our programs, Think Wood and Woodworks, are shifting to a hybrid model where intense education is provided online, but networking events will be in person. And then similarly, I think there's obvious things about travel, being much more diligent about using Teams and Zoom and other tools like that for that 1 hour meeting that you used to travel 2 days to go to. And so I think we'll do more with less, and I think that's exciting. And then overall, we've adapted and we continue to adapt our strategy based on what we see as shifts in the marketplace. And those of you who are interested in seeing that, it's available on our website, softwoodlumber.org. We just released our 2021 to 2025 strategy document and invite you to check it out there.
The next question comes from Chad Furley from BPI Lumber Engineered Wood. And Craig, this one is for you. Where do you see the I-joist LVL LSL studs rim board market heading for the next 5 years? Again, the crystal ball.
The crystal ball. Well, that's an interesting question. It's continued to grow in a lot of those. That's a lot of items, but in single family housing and multifamily housing, it's been a difficult price environment for that, given the price of plywood and veneers. A lot of those products have had a difficult time catching up on that pricing. But long term, I mean, it's a growing, it's an engineered wood, and the use of it and the acceptance and the way it's moved into our marketplace has consistently grown, and I think it'll continue to grow. It's here, and it also it creates a lot of efficiencies in the supply chain. So I think it'll continue to grow for us.
All right, thank you. Given this one is for you, it's coming from Anthony Lawley of the IV Group. What impact will the current labor shortage have on your businesses? What are you doing to attract and retain the best talent? Has international recruitment been part of the discussion?
So as I said earlier, we probably have more employees closer to their retirement date than their start date. What we've had to do is be very proactive in terms of our engagement, engaging the broader population as an industry, not just as an employer or individual company, introducing younger people or parts of communities that don't necessarily have a history joining our industry so that they understand what those opportunities are. We've also gone overseas. We've been recruiting foreign workers through the federal program and have welcomed them into our communities. I think the other thing that's really unique to our business compared to other employment options that are available in the North is just the flexibility and the family related work environment that we have and the flexibility that we can show people. So it's really a matter of, as I said before, education to us in terms of what's required to encourage people to come and join us, and quite frankly, us educating people what those opportunities are.
All right. Craig, the next question comes from Blake de France from Joe Scan. What effect will the recent Russian ban on exported logs have on North American lumber prices?
I don't know exactly the effect on lumber prices in North America because it's a shift of fiber. But it'll have an effect on some log prices from an export basis into China, as China has been the leading recipient of exported logs. And we'll see how Russia can ramp up their processing on lumber. And a lot of those, they're also talking like in some regions, they want to have that product kiln dried, which they don't really have the capacity for that yet in Russia. So, supply and demand over time, finds its way. But short term, Russia doesn't have real capacity to supply product into the U.S. in any substantial capacity. I mean, they will over time. We're starting to see some of that, but that takes a while. So from a global perspective, there'll be Russian products that make their way to Europe more in a finished product, which in turn could change pricing somewhat.
Thank you. Andrew, the next question is for you, coming from Glenn Meehan from GDS Lumber. Will the new U.S. administration change anything to the U.S.-Canada trade dispute?
That's been an ongoing question to be answered from each administration to the next one. With the current environment of pricing and all of the pressure and all of the home buyers that are being out of the market as prices are going up on the cost of the construction, and they're being limited to the affordability. I believe that we will try with this administration particularly to lighten up any which way to bring product at a lower cost with less duty or tariff opposed to bring price stability and affordability, while for the most part the marketplace is under stress over this rising cost of construction. So for sure, I believe that we'll try to have a better relation in terms of a friendly and a lower tariff or lower cost. But this is nothing new. This dispute has been going on for good reasons over years and years and years.
Thank you. Thank you for sharing your thoughts on the subject. The next question is for you, Kevin, coming from David Duncan from Let's Plant Trees. What impact will the Canadian federal government's $2 billion tree planting program will have on the availability of nursery seedlings?
I think if we don't address the supply side, then certainly it'll cause a challenge, either meeting that goal or the impact on industry in terms of its regular reforestation. Having said that, that $2 billion tree program is spread over 10 years. And so there is time for us to see a supply response to fulfill both the federal government's mandate and the industry's commitment in terms of reforestation.
All right, thank you. The next question for Andrew is in three parts, Andrew, and it's coming from Bob Giroux from Soundbird. How can the supply shortages be addressed? Will there be new production in North America? What do you think needs to happen in order to get the supply-demand more in balance? And when might this happen?
We've been struggling with the idea of that the world demand for our products are in short supply. The demand exceeds it tremendously. New production, as we mentioned, will be coming on, whether it be in North America, which Greg mentioned that just this week we started new production, and I assume and hope that we see more manufacturing. Whatever the manufacturers can do in terms of having additional manpower, which has been somewhat curtailed some of their ability to produce more and bring more product through the pipeline. And I guess there's supply shortages may be addressed with things that the builder has never really considered, which is, different substitute products for the time being, whether it be different species of lumber or whether it be pre-manufactured lumber. There's just maybe just different considerations just to build the bridge in the short term. But over time, it will hopefully, as it always does, bring an equilibrium.
All right, thank you everyone. I'll move to the next question. We got many from all these participants. And this question, I would like everyone to give us your input, maybe starting by you, Andrew. The question is coming from Ryan Rotondo from Russell Lumber. When do you expect the market to return to normal? Short and interesting question. Andrew, your thoughts on that?
So, Young Frankenstein, if you saw the movie A.B. Normal, not abnormal. Maybe when we return to abnormal, which is the new normal, will be the way that we'll be operating. So the current situation is A.B. normal for sure. The new norm won't be the way things were pre-pandemic. It will be a mixture of how we operate today and how certain parts of the scrutiny and the type protocol that we have in place will be loosening up. And so another year or so, we'll return to what will be the new norm and probably make adaptations as we go along with that new norm.
All right, interesting question. Kevin, your thoughts on that, the new normal or the normal?
Yeah, and what is normal? You know, in the commodity business, we are price takers, which means, you know, speculating on where it goes doesn't come with any ability to drive it in that direction. I have the same access to the same pundits that are writing the same information around housing and multifamily and the like, and they're seeing a good run through 2021 and 2022. I don't see any flaw in the logic that's there. I think we've got a demand that is really trying to make up for a long-term deficiency, and supply doing its very best to try to keep up. So I don't see a return to what might have historically been more normal performance or demand-supply balance in the foreseeable future.
Thank you, Kevin. Craig, your thoughts?
Well, there's an old trading adage that goes, when everyone thinks the same, usually the opposite happens. So it could be when we least expect it.
Thank you, thank you. And Case, what do you think?
Well, I don't think my crystal ball is any clearer than anybody else, and so you know, I echo what the others have said. I think the new normal will be a different type of operating environment, but we'll adapt. And I, as I said earlier at my closing, I think the future is bright for all of us at this point.
Thank you so much to the four of you. It was quite interesting to have you live with us, share your perspective. I want to start a thank you to send my thank you to you. Merci beaucoup pour votre participation. I wanted to bring this French touch. We're in Montreal after all. I want to make time to thank Mr. Reinhard Binder of Binder Holes for his insights, very invaluable. And of course, the partners of this event. It was made possible thanks to the generous contributions of the sponsors, starting with Western Forest, as well as the Bid Group, LBM Advantage, USNR, CP Rail, Boscus, Sunbird, OLMA, DK Spec, Boise Cascade, Fonds de Solidarité, FTQ, and Hub. I would like to have a big round of applause. Thank you so much to all the sponsors. The host of the Montreal Wood Convention, you know them well, the Ontario Forest Industry Association, the Maritime Lumber Bureau, the Quebec Forest Industry Council. Special thanks for providing the PowerPoint slides illustrating the different topics. And of course, the Quebec Wood Export Bureau are truly looking forward to seeing all of you in person in 2022 at the Fairmont Queen Elizabeth Hotel in Montreal. Thank you everyone for participating to the 2021 experience. Be safe. Merci.